Hey everyone, and welcome to this deep dive. Are you ready?
I'm ready. Let's do it.
Awesome. Okay, so Kiyosaki, he starts with this idea of like a rich dad and a poor dad. So these are two figures that were really influential in his life growing up.
Yeah, two mentors kind of shaped his views of money, but in totally opposite ways.
And they had like totally different mindsets about money.
Right.
And you know, the rich dad, he believed that the lack of money is the root of all evil, whereas the poor dad said the love of money is the root of all evil.
Yeah, and it really gets you thinking about all the different beliefs we have about money, right? The ones we've maybe inherited or picked up along the way.
Without even realizing.
Without even realizing it, yeah.
Yeah, totally. And like, which one resonates more with you? Which perspective?
That's a great question. I think it depends on the day and my mood, but it's something to think about for sure.
Yeah, and this kind of leads perfectly into this idea of the rat race, right? And they both, Kiyosaki and Janney, kind of talk about this in their own way, but it's this feeling of you're working for money, you're paying bills, then you're working more to pay more bills, and you're just kind of stuck.
Stuck on a treadmill going nowhere fast.
Yes, exactly.
And Janney says, a traditional job, while it's important and for some people can provide stability, it might not be the fastest track to becoming wealthy.
Yeah, like it makes sense.
Yeah, because you're trading your time for money. You only have so many hours in a day.
Right, so you're limited.
Exactly.
Okay, so it's not that jobs are bad, but maybe they're just one piece of the puzzle.
Exactly.
They're not the whole.
Right, and that's where building assets comes in.
Okay.
That's a big part of both their philosophies, building assets that generate passive income.
Got it.
So eventually that income exceeds your expenses and you're not on that treadmill anymore. That's what escaping the rat race really means.
I love that. And Kiyosaki actually gives this really great example. He talks about buying small houses to generate cash flow.
Yeah, rental properties.
And he starts with this $75,000 house that he got for only $20,000.
Wow, that's quite a deal.
And then he resold it later for $60,000.
Okay.
And get this, he said he only invested like 5 hours of work into the entire deal.
That's a prime example of leveraging your time and resources.
It is.
To build wealth. And kind of ties into what Janney talks about too, about solving problems. That's where the big money is.
Okay, so he's saying it's not just about working hard, it's about finding a need and then creating a solution that, lots of people are willing to pay for.
Exactly. You got to think bigger, think about impact.
Yeah, like think about McDonald's, how many customers they serve every single day. That's
scale.
Huge, yeah. And Kiyosaki even uses the example of Ray Kroc, the founder of McDonald's. And we all think about McDonald's, it's burgers.
Right, the food.
But really his business was the real estate.
He was building a real estate empire. That's so smart.
So wait, so he bought that house for $20,000 and just flipped it for $60,000. Like, how does that actually work?
Yeah, well, it sounds like he found a property that was undervalued, maybe needed a little work, and then he was able to resell it quickly for a profit.
So he didn't just work for hours and hours to earn that money. He used his, knowledge.
Just financial intelligence, yeah.
To see an opportunity and make his money work for him.
Exactly, and that's a key difference.
Yeah, instead of the other way around.
Right.
But, I think both of these guys also talk about, like, the fear that holds us back when it comes to money.
Oh, absolutely. Fear is a huge factor.
Right, like we're scared of losing money, we're scared of making a bad investment.
Making the wrong decision.
Yeah, totally.
And it's understandable, but Kiyosaki has this analogy he likes to use about thinking like a Texan.
Okay.
Go big or go home.
Oh, I like that.
But obviously, he's not saying to be reckless. It's more about embracing calculated risks.
Right, and learning from your failures.
Exactly, because failure is part of the process.
Totally. It's more about analyzing opportunities, not just shutting down every idea because you're afraid of what could go wrong.
And he even shares this story about the 9 richest men in America back in 1923.
What happened?
So many of them died broke despite all their initial success.
Wow, you think they'd be set for life?
You would think so, right. But it goes to show that just having money isn't enough. You need financial literacy to manage it and grow it.
So it's not just about earning, it's about keeping it.
Exactly. And making that money work for you over the long term.
So it sounds like financial literacy is the key to overcoming this fear and cynicism.
It really is. It's about developing that financial intelligence.
I'm definitely seeing that it's not just about luck. It's not about being born rich. It's about equipping yourself with the knowledge to make smart financial choices.
Yeah, you can create your own success story.
But I bet there's a lot more to unpack here, right?
Oh, absolutely. We've just scratched the surface.
Okay, so let's take a break. And when we come back, we'll dive into some of those specific strategies that Kiyosaki and Janney outline in their work.
Sounds good.
Okay, so we're back. And, we were talking about assets and Kiyosaki. He really kind of like challenges that traditional idea that a house is always a good investment.
Yeah, he actually argues that for most people, a house is a liability,
Oh,
especially if it's draining your cash flow every month instead of, generating it.
so it's not about never buying a house. It's about understanding the financial implications.
Exactly.
Yeah, yeah.
He points out all those hidden expenses, like property taxes, insurance, maintenance,
Right, right.
things people don't always think about up front. And if you're putting all your money into a house, you might miss out on other investment opportunities.
Which could give you a much better return.
Yeah, exactly.
Okay, so are you saying we should all just rent forever?
No, not necessarily. But if you are going to buy a house, make sure it's not, stretching your budget so thin that you can't also invest in those income generating assets.
Okay, so it's about balance.
Right. Remember, Kiyosaki's rich dad taught him to focus on building a business, not just getting a job.
Mm-hmm.
That's how you create real wealth.
Like that McDonald's example where Ray Kroc, his real business was the real estate.
Yeah, not the burgers.
Yeah, it's about like creating a system that generates wealth even while you sleep.
Passive income. That's the key.
Okay, so one strategy that Kiyosaki talks about is incorporating yourself.
Uh-huh.
Is that even something that like regular people do?
It can be, even for smaller businesses or side hustles. It can actually significantly reduce your tax burden because a corporation is taxed differently than an individual.
Wait, so different set of rules? That kind of sounds cynical. Are you saying there are like loopholes that only wealthy people know about?
It's not about loopholes. It's about understanding the tax code.
Okay.
How to structure your business legally to your advantage.
Ethically.
Yeah, of course, ethically. And corporations can deduct a lot of expenses before they pay taxes. Things like, business trips or even parts of your car or home office if you're using them for work.
Oh, okay.
So it's completely legal and ethical. A good accountant can help you navigate all of that.
Okay, so it's about being smart, not sneaky.
Exactly.
Got it. But, becoming financially savvy, like that doesn't happen overnight. What are some like concrete steps people can take to start building that financial intelligence?
Well, both Kiyosaki and Janney really emphasize continuous learning.
Okay.
Read books, attend seminars on finance and investing.
Learn from the experts.
Exactly. Find mentors who are already successful in areas that you want to learn about.
Yeah. Find people who are a few steps ahead.
Yeah. And Janney really stresses the importance of embracing failure.
Oh, yeah. He talks about that a lot.
Yeah. He says, fail fast, and move on to the next thing.
It's such a good perspective.
Right. Because so many people are terrified to even take risks because they're afraid to fail.
Yeah, I've definitely fallen into that trap. Like, oh, I can't afford it. I can't afford to take that risk. But now I'm like, wait a minute, how can I reframe that question?
Exactly.
But, fear of failing is one thing. Some people are just plain cynical when it comes to money. Like it's a rigged game and they can't win.
Yeah, and Kiyosaki actually has some great advice for overcoming cynicism. He says, cynics never win, cynics criticize, and winners analyze. So it's not about blindly believing everything you hear. It's about looking at opportunities with a critical eye. But don't let negativity cloud your judgment.
Right. So be a critical thinker, but also be optimistic and hopeful.
Yeah, exactly. Remember that story Kiyosaki told about how his rich dad stopped paying him when he was 9 years old?
Yeah, he worked at his convenience store.
Right. He made him work for free, basically.
Oh, sounds kind of harsh.
It does. But the point was to force him to think outside the box and, figure out how to generate income on his own.
Oh, okay.
That's a pretty intense lesson, but it worked.
So he's basically learning about money by being exploited as child labor. Is that what you're saying?
Well, his rich dad had some unconventional methods for sure.
For sure.
But Kiyosaki learned a lot from him, even if it wasn't always easy. And he also talks about the importance of surrounding yourself with the right people.
Yeah, birds of a feather flock together.
Exactly. So find your tribe of financially motivated people.
So, I just need to go make friends with rich people. Is that what you're saying?
No, it's not about chasing wealthy people. It's about surrounding yourself with people who share your ambitions.
Okay. Who are on the same path.
Yeah. They don't need to be millionaires already.
Oh.
But they're actively trying to grow financially, and you can learn from each other.
Yeah, support each other.
Yeah, absolutely.
But it sounds like you also need to be a bit discerning about who you trust.
Yeah, for sure. Kiyosaki even talks about how he studied the investment strategies of Warren Buffett.
Oh, wow.
Yeah, even Donald Trump's deal-making tactics.
Interesting.
So he wasn't trying to be exactly like them, but he recognized that they were incredibly successful.
Yeah.
And there were valuable lessons to be learned.
So it's not just who you know, it's who you learn from.
Exactly.
Yeah, and it sounds like there are a lot of different paths to financial success. There's no one right way.
Right. It's a journey, not a destination.
I love that.
And there will be setbacks along the way. The key is to keep learning and adapting.
Keep asking yourself that question. How can I make my money work harder for me?
That's a good one to ask regularly.
It is, but what about like managing risk?
Yeah.
Protecting what you've earned. I know they both, Kiyosaki and Janney, touch on that too.
Yeah, Kiyosaki talks about using corporations to shield your personal assets from liability.
Oh, okay.
He also emphasizes diversifying your investments.
Don't put all your eggs in one basket.
Exactly. And he shares this really helpful tip about using stops when investing in the stock market.
Okay, I get the diversification part, but I'm not sure I understand stops. Can you break that down for me?
Sure, a stop is basically a preset order to sell your stock if the price drops below a certain level.
So it's like a safety net.
Exactly. It's a way to mitigate potential losses and protect your capital, especially if you're new to investing and maybe a little more risk averse.
I like that. So it sounds like Kiyosaki is really into using these different financial tools and strategies, whereas Janney's more focused on mindset and habits.
You're right. They do have different approaches, but they complement each other well.
They do. Yeah.
Like, remember how Janney talks about being mindful of how we're valuing our time?
Yeah.
And he believes that consistently trading time for money in a traditional job can really limit our earning potential.
Yeah, so instead of just focusing on how to earn more at your job, what does he suggest?
He says, find ways to leverage your time and your skills
Okay.
to create multiple streams of income.
Multiple streams of income. I like that.
Yeah, and build a business that can run without your constant involvement.
Oh, so that's how you escape the rat race.
Exactly.
You're not trapped.
You have freedom and flexibility with your finances and how you spend your time.
I love that. But he also makes it clear that entrepreneurship isn't for everyone.
Yeah, it's not a walk in the park.
Right. It's not easy.
And he also says, a lot of us are held back by these false beliefs about money.
Oh, yeah, totally.
Things we've internalized from our families or society.
Like little scripts running in the background
Totally.
that we don't even realize.
Yeah, and he encourages us to question those beliefs and adopt a more empowering mindset around money.
Like one that focuses on creating value.
Yeah, solving problems.
Okay, this is all really resonating with me. I'm starting to see that financial freedom isn't just about having lots of money. Right. It's about having the freedom to do what you want, when you want, without being tied down by financial worries.
And Janney talks about aligning your financial goals with your values and passions.
So it's not just about money for money's sake.
Right. It's about building a life that is meaningful and fulfilling.
Yeah, I love that. That's a great goal to strive for. But okay, let's get real for a second. What are some practical steps that people can take? Like, where do you even begin?
Well, Kiyosaki says, and I love this quote, he says, all of you were given two great gifts, your mind and your time. It is up to you to do what you please with both. He's all about taking action.
Yeah.
So start by taking classes, reading books, attending those seminars we talked about.
So invest in your education.
Exactly. And don't be afraid to make offers and negotiate.
Oh, I think that's something a lot of people are afraid to do.
Yeah.
Negotiate.
But it's a crucial skill to master. Whether you're buying real estate, making investments, or even just asking for a raise, putting yourself out there is key.
Oh, totally. And he also says, look for change because that's where the opportunities are.
Yeah, change creates opportunity.
Yeah, and he actually suggests finding people who want to buy something first, then finding someone who wants to sell.
That's interesting.
So you're creating a win-win situation.
Yeah, potentially making a profit without even using your own money.
Okay, that's a really interesting strategy.
It is, but it sounds like it takes a certain level of confidence and business savvy.
It does. That's why I think having good advisors is important.
Right.
Kiyosaki talks about, finding a good broker. Someone who has your best interests at heart.
Yeah, surround yourself with a team of trusted professionals.
Okay, so find your team.
And don't forget about the human element of building a successful business.
Oh, yeah, people skills.
Yeah, learning to manage people effectively, whether it's employees, contractors, or even family members.
It's a whole other skill set.
It is, but it's crucial.
Yeah, for sure. So it's not just about crunching numbers and making deals. It's about becoming a well-rounded individual who can navigate the complexities of the business world.
And he says the most important specialized skills are sales and marketing.
Okay.
And that the main management skills you need for success are managing cash flow, systems, and people.
Wow, that's a lot to juggle.
It is, but it's all part of the process. Building true wealth is a multifaceted endeavor.
It is, but I know both Kiyosaki and Janney have one more piece of advice that's like pretty central to their philosophy.
You're talking about paying yourself first, right?
Yes.
That's a big one.
That always seems so counterintuitive, especially if you're living paycheck to paycheck.
It does.
How can you possibly prioritize saving when you're barely covering your expenses?
Well, it might seem strange, but they argue that by consistently putting money aside for yourself, even if it's just a small amount, you're sending a powerful message to your subconscious and the universe
Okay.
that you deserve abundance.
So it's more about the mindset shift.
It's both, really.
Okay.
Kiyosaki says even when he was struggling, he always paid himself first because he knew that consistent investing, even with small amounts, would build wealth over time.
Compound interest is a powerful thing.
It is, and this practice also forced him to get creative about generating income.
So it's a double win.
Right. You're building good financial habits,
Yeah.
and you're pushing yourself to earn more.
I like that.
And he even observed that his rich dad, when short on money, would increase his giving, believing that generosity would actually create more abundance in his life.
Okay, I see how that could shift your mindset from scarcity to abundance.
Exactly.
But isn't that a bit risky if you're already tight on cash?
It can be, but Kiyosaki argues that when you give freely, you're demonstrating trust in the flow of abundance
Okay.
and your willingness to be a part of that flow.
It's like you're making space for more to come in.
Exactly. It's about shifting your focus from lack to possibility.
That's powerful.
And he also talks about, building a legacy with your wealth. Investing in causes you believe in. True wealth isn't just about money. It's about making a positive impact on the world
Yeah, using your money for good.
and creating a better future.
I love that.
And Janney agrees with that. He encourages us to use our financial resources to pursue our passions.
Okay.
To make a contribution to the world. Remember, financial freedom is ultimately about having the flexibility to live a life aligned with your values.
It's not just about escaping the rat race. It's about building a life that you love and using your resources to make a difference.
That's a vision worth working towards.
It is. But okay, before we wrap up this section, I know that Kiyosaki introduces this idea of the 4 quadrants of cash flow.
Oh, yeah, that's a big one.
Can we at least touch on that briefly?
Yeah, absolutely. He uses this framework to explain the different mindsets and financial strategies associated with earning money.
Okay.
So he labels these quadrants as E, S, B, and I, which stand for employee, self-employed, business owner, and investor.
Okay, I'm seeing where this is going. So the E quadrant, that's like people who work for someone else.
Exactly, trading their time for money.
The S quadrant, that's people who are self-employed or have a small business.
Right, often working long hours, and their income is directly tied to how much they work.
The B quadrant, that's the business owners who've built larger businesses that can run without their constant involvement.
Yeah, they're generating passive income through systems and processes.
Okay, and the I quadrant?
That's the investors.
Okay.
People who invest their money in assets like stocks, bonds, real estate, or other businesses.
Got it. So Kiyosaki's saying that most people, they spend their lives in the E and S quadrants, working hard for earned income and paying a big chunk of it in taxes.
Right. And he encourages us to aim for the B and I quadrants,
Okay.
where you can create passive income streams and leverage your money to work for you.
Not the other way around.
Exactly.
Okay, I like that. It feels empowering.
It is empowering. And both Kiyosaki and Janney, they emphasize that it's a process, not a quick fix. Financial freedom is a journey, not a destination.
Yeah, you're always going to be learning, growing, adapting.
To the ever-changing financial landscape.
It sounds like we need a whole other deep dive just to cover the 4 quadrants in detail.
We probably do.
But I think we've covered some incredible ground today.
We have.
And remember, the key is to start small, take one step at a time, and commit to continuous learning.
Exactly.
So if you're feeling inspired to take control of your finances, start educating yourself, set some achievable goals, and find people who support your vision.
And never forget, the most important investment you can ever make is in yourself and your